What's going on, everyone? I'm Encore, and today's video is something that no investor wants to hear. Now, there are a lot of things that you may hear, but this one particular thing might shock you actually. Every investor should and needs to go through bear markets. Now, if you don't know what a bear market is, that means a drop, potentially a crash in the market. And a crash is typically when the market has gone down 20% or more. Okay, so why is it necessary to go through a bear market? Well, first let me show you that regardless of the asset that you're in, whether it's stock market, whether it's in real estate, or my favorite and where my affinity lies now is crypto markets, I want you guys to take a look, first of all, that it happens. It's part of the process and has happened long before you have ever invested. So let's get right into it. So first things first here, I want to show you guys, this is the stock market. Okay, now this chart here is for US large cap stocks, so essentially the S&P 500. And if we scroll down here, and I can show you guys that from where this chart is taking you from 1870 to 2020, okay? 2021, 2022. That's kind of where, no, as of June 30, 2020. So that's where it stops, okay? But I mean, look at these periods here where, so this here is a market crash episode, which is the highlighted red. The red line itself is the cumulative real wealth, and the blue line is just the peak wealth, okay? So the top of that market, and then the wealth that's lost during the crash, okay? You guys can see, I mean, we're talking about the Depression, we're talking about, you know, World War I, World War II is in here, the Great Depression is in here, the crash in the Great Depression, we got Cold War. I mean, you look here at all these time periods where the real wealth has actually dipped below the peak wealth, okay? Black Mondays here, and then, I mean, this doesn't even take into account where, you know, the pandemic and everything happened here, okay? So look at all these time periods, dip, all the way down, okay? But the trajectory of the entire stock market is what? It's going up, okay? But along the way, you're taking so many hits, okay? And typically, every 10 years or so is when the market is due for a significant hit, okay? So if you think about it, 2008, 2009 was a great financial reset. So the market took a big hit then, and it's been since up until 2020. So almost 10 years to the, you know, and things happened again where the market dipped. Now, no one can predict, for the most part, the event that's going to cause the dip, but you can pretty much guarantee that a 10-year span, there's going to be small dips, if not one significant one, okay? So I just want to show you this, the stock market here, whether you started in 2017, 16, 15, in the 90s, the dips have happened prior to you investing, and they will continue to happen going forward. So that's the stock market. Here, I wanted to show this to you guys, okay? So this here is the U.S. housing price index, okay? They call it the inflation adjusted Case-Shiller. That's the blue line. That's the U.S. national house pricing. And this orange line here is just, or the red line here is just the real rate of appreciation. Anyway, it's about 1.15%. Anyway, for this chart. But here's the real thing here, is that you can see this line is not a straight upward trajectory. It's not going like the red line here. Okay, so the actual home pricing comes up, and we're talking about late 80s, early 90s, dips right back down below. Comes all the way back up till we have that great financial reset, and then we start dipping all the way back down, and now we're going right back. Now this is up to 2017, and the housing prices have skyrocketed even more, and now they're coming back on the tail end. Okay, so again, not a straight line, dips up and down. Okay, and of course, our friend, my favorite, Bitcoin. What has it done? We're looking at here since 2012. Okay, yeah, not much happening here. Then 2017 and 18, we're getting a nice spike up, coming all the way back down here. in 2019, and then having a nice little up, back down, and then obviously through 2020 and up, all the way up, all the way down, all the way up, all the way down, a little bit of spike up, and then all the way back down again. Now, when I come to crypto, everyone's pretty aware that it's volatile and all of that kind of stuff. And so everyone thinks it's just crypto related. But I've shown you that it happens in the real estate market and it's happening in the stock market. It happens all the time. So why is this necessary? Well, one thing is it's like a badge of honor. Okay, when you go through the tough times, if you guys are in sports or in anything, any hardship that you have, once you've been through the hard situations and the difficult, whether it's mentally, emotional, physical, there's some hardship there. When you come out on the other end of it, you have an appreciation for the upswing, right? The good part of it. And so that's from one aspect of it. But two is, if I tell you that every 10 years in the stock market there's going to be a dip, if I tell you that every 15, 20 years is a dip in the real estate market, if I say in crypto every 4 years it happens, this means that it's a natural process. And if you don't learn to handle the bear markets, better yet, if you don't know how to plan for how to thrive in the bear market so that once the bull market is there, you're riding a significant high, then you're never going to be in anything worthwhile to invest. So you need the bumps, you need the bruises. It's part of the learning curve, and it really gives you fortitude for the next time around. So when everybody else is panicking and getting out of situations, you're going to be jumping into them because one, you have conviction that you know that the bad times don't always last, just like the good times don't always last. Two, you're going to understand that, oh my God, had I accumulated at this time period, I would have been way better off now as the market goes up. So that learning process happens, so you're ready for the next time, okay? And just overall, you just need to understand that it's part of the process. When the market dips, it doesn't mean you're a bad investor. Just like when the market's on an upswing, not everything you do that turns out well makes you a genius. So there are so many learning lessons in markets in general, but in the bear market you learn way more than you do when you have a bull market or an upswing in the market. Okay, so in my opinion, bear markets are 100% necessary for you as an investor, and in terms of your maturity, but also in terms of your portfolio gains. So the common thread is within the financial markets is when there's blood in the streets. Right? And I know it's a little bit graphic, but really what it means is when people are getting out, there's panic. Those are the times that we want to accumulate great assets so that when the market changes, which it always does, it always goes back to an upswing at some point. You don't know when that point is, that you are in such a great position that your wealth exponentially grows. So while people are escaping and having fear, uncertainty, and doubt, you're jumping into quality assets that you're getting on a cheap. And then once the market rides high, you've got profits to take and to ride the wave. Okay, so there are many reasons to be involved in a bear market, but the most important is to understand that it is part of the process. And for you to be an investor, for you to be invested in any asset for any period of time, it's necessary. Okay, and it allows you to gain a better position in that quality asset. Of course, that requires you to do your work. That goes without saying. But you need to understand that bear markets are necessary and bear markets do not last forever. Just like bull markets or upswings don't last forever. No, there are market cycles to this. So understand that what we're going through now is 100% necessary. It makes us more hardened as investors. We learn better ways to strategize. We learn techniques to survive. And then once the market changes and goes to an upswing, then we thrive. That's really what it comes down to. So don't be afraid of the market. Do your due diligence, do your research, find quality assets, have conviction, and dollar cost average. That's the key. Dollar cost average. Take nibbles, bits and bites as you go along. All right. So I know things are tough out there right now. I just want you to understand that this is necessary for us to grow as investors. All right, guys. Hope you enjoyed the video. Make sure you take action, invest in yourself today, and I'll see you guys in the next video.